So taking this conversation of redefining the direction and setting the course, we have an exciting panel coming up. बहुत उर्दू में मशहूर कहावत है कवाकिब कुछ नज़र आते हैं कुछ. So we are kind of becoming used to this kind of surrealism in the landscape that we are navigating. We never know what we are dealing with. The reality and the perception is not so aligned, especially in case of Pakistan, where there's a dire need to understand our own mechanism for setting course. I was having this conversation with Sir Sohail this morning about prior to setting the trajectory, the need to understand who we are. Forever chasing the ideals of the others may not serve our purpose very well. So this second panel coming up is perhaps going to elaborate on the same. They're bringing a lot of global insights into the local landscape. How to best position Pakistan, how to best restructure the infrastructure here, how to get the best out of it, how to optimize our own indigenous resourcing. So we are kind of living in a phygital world where digitization has taken control of our lives. From A to Z, everything is now technology. So we needn't speak of technology as something, a separate realm or a separate department any longer. So we are living with AI and we are living with protectionist trade regimes. We are talking of disruptions in supply chains. The corporate playbook has been redefined. And amidst all this, how do we use the best lessons for our own benefit is the trick or the requirement. So the esteemed panel with us here, it's a big one, and I'm very excited to announce, with 2 decades, and sir and ladies, as I announce your names, please join us on stage. We have Samad Daud. Samad is here with 2 decades of experience in mergers and acquisitions, and he's the CEO for Engro Holdings, and he's bringing a lot of in-depth understanding of how to go about bringing global insights for local development. We are being joined by Saira Awan Malik, President TCS, with history from Yale and legal education from Cambridge University. Saira is best positioned to navigate through the logistic landscape of Pakistan. We next have Naz Khan, Principal Country Officer, IFC. Naz is an old friend, and she's always brought these absolutely fabulous perspectives on the evolution that is taking place in our landscape. We next have Mohammad Hamayun Sajjad Saab, CEO, Mashriq Pakistan. Hamayun has been recognized as one of Asia's top 100 fintech leaders for his outstanding work in financial technologies, exceptional leadership skills, and strategic vision. And he's contributed to several notable brands, including National Bank of Pakistan, United Bank Limited, and Easy Pesa. Dr. Aisha K. Khan, Regional Managing Director, Acumen. Aisha is here. She is presently the Country Director at Acumen and has a strong background in business strategy, economic policy, international development. We have Kabir Naqvi, FCCA, Entrepreneur in Residence, Abhi FinTech. So all the tech talk that I was going on about and how FinTech is now going to be leading us. Kabir is a distinguished finance professional and a business leader with deep expertise in microfinance and fintech sectors. The session is going to be moderated by Waqarul Islam. He's a corporate executive turned entrepreneur, held various senior positions with Comtel, Nokia, NCR Corporation, and currently is the director of Jaffa Group, as well as the director and CEO of JBS. Waqar will be moderating the session. I'm sorry. Asad Hamid Khan, please join us on stage. Asad will be moderating this session. And Asad, over to you. We have a very interesting panel bringing global insights into the local development. Thank you.
So, Assalamu alaikum everyone, and thank you very much for getting the panel on the stage. The topic that we are going to be deliberating and rather sharing the insights, I think is very apt after the introductory session of the day, hearing the wonderful policy and government playbook, understanding from them that how they feel that their policies have panned up till now, and also understanding from them where they feel the course needs to be corrected in the future, plus what they feel have been their wins to date. So in no particular order, but before we start, just to identify how do we pick up on the Pakistan's business playbook and understanding the framework of our conversations. It's a 60-minute talk, and we'll be picking up on three areas. One is the regulatory framework. The other element is business and their practices, having this wonderful, diverse, rich insight sitting on the stage. And last but not the least, talent, quality of talent, and how they feel that talent is being nurtured, not just to develop as leaders or successors within their organization, but for the wider benefit of the corporate sector, and also linkages with the universities. So, if I can start with, I think it's easiest if we start from the furthest end and start with Hamayun. So, having this financial services background, having spent your time understanding how automatically the economy connects the financial system. So it'll be good to hear your understanding of the current state of play in terms of the regulatory framework. How do you see that supporting? Secondly, it'll be great to have your pick on how you see your business and the practices and how they have supported up till now. And last but not the least, your take on talent. Thank you.
Thank you for picking me as the first person to enter this dialogue. Let me start by sharing my personal journey of becoming an entrepreneur during my professional career. In 2013, I decided to move to Australia, and I actually decided that I would never come back to, becoming an employee myself. So the easiest way for a technical person was to go on Google and search how to set up a business in Australia. So business.gov.au helps you with all the steps of setting up the company, and then also understanding how do you cultivate that company's business in Australia. The journey was, back in 2013, so convenient that I had never visited any government office in Australia. It was all online. But even after setting up the entire business online, I realized that it is just one part. Doing your business is something that you have to own and then drive yourself. Fast forward that experience to launching the bank in Pakistan, where actually everything happens manually, and then you have to engage with multitude of stakeholders. What I'm trying to get to is, at the end of the day, it is your responsibility to own what you want to achieve and not necessarily blame the ecosystem of not helping you. So the launch of bank literally happened in a matter of less than 15 months in a country like Pakistan. It is that grit, that resolve, that the sponsor said that this country has the opportunity that Mashriq would like to capitalize on. And working with regulators across SECP, State Bank, Ministry of Finance, generally across the government of Pakistan. As much as it was tough, but I actually believe that just by having that resolve, we were still able to launch the bank successfully and gain the traction that we are immensely enjoying now. Happy to share more, but I think we'll tag along the conversation and then share my thoughts.
Thank you so much for inviting me to be part of this panel. I'll start off with a statement that one potential foreign investor shared, which I have mixed feelings about. So he shared that from his perspective, Pakistan is a country of immense potential and will forever be so, which I thought was a double-handed sort of a compliment, because it sort of leaves this notion that there's so much work to be done, and there's an opportunity to see how we're going to organize around that. And I just want to highlight a couple of things which really matter, because the whole aspect of a enabling environment, what businesses do, and then its impact on talent are interdependent issues that feed off each other. So I'll share one aspect of regulatory environment, where at this point in time, what we see is that private sector credit to GDP has halved over the last 25 years. And a lot of that is driven by the way tax policy in particular has been driving incentives. As Charlie Munger said, show me the incentives and I'll show you the behavior. At this point in time, just from a capital allocation point of view, if an investor invests in a company just to maintain purchasing power, not to make money, not to become wealthier, just to maintain purchasing power, requires a profit before tax on equity, return on equity before tax of 31%. Why is that? Because you take devaluation, you take US inflation, you look at super tax, dividend tax, and corporate tax, WWI, WTPPF, another super tax there. Comes to 31%. There are not a lot of businesses that can give you a 31% profit before tax return. This issue then gets further compounded when you're looking at sales tax differentials. Vast segments of the economy, when you're talking about retail, logistics, food, these are multi-billion-dollar sectors in Pakistan. And these are sectors where a lot of capability is required, a lot of IT is required, a lot of scale can be achieved, and the future billion-dollar companies will be in and around this. But these companies or these sectors are all lower margin, high capital velocity businesses. You have to keep churning your capital over and over again. So if a company is sales tax compliant and another one isn't, and you have a 10% gross margin and the other guy is skimping on 18%, you can't compete your way out of that business. You can't grow that business. And hence, those businesses remain small, and they remain confined to a very small segment of the formal sector, which in itself is shrinking as far as the economy is concerned. It doesn't need to be this way. So if you combine the income tax and the sales tax, you're looking at anywhere between 33 to 50% disadvantage against the informal sector. So what is the consequence of this? The consequence is far more important and more value accretive to have a good tax advisor to see how you get out of the formal sector than it is to run a good business. Which means that businesses remain informal. Informal businesses don't want talent. They don't need data scientists because they're not documenting anything. They don't need technology solutions in AI. They need their son to come in and take over the business and be sitting on top of the cash register. And hence you see this cascading impact from one to the other to the other. So in my view, I think all the ingredients for really going in and spurring economic growth built on the foundation that the government has done a remarkable job in providing stability. Remarkable job, and I think they deserve a lot of credit. But building from here, we need access to capital. The banks are flush with liquidity, and the investors have a lot of liquidity because they haven't not invested in the past few years. So money is not the problem. We have talent as well, at least talent to get going, because 1 million people have left Pakistan, and there's a huge expat community along with the local talent. Talent's not the issue. And we have abundant, cheap energy. Pakistan has one of the lowest marginal cost of energy in the region. It's just that it doesn't get utilized, which is why the fixed costs are so high, which goes into energy pricing. But if you look at the marginal cost, it's one of the lowest. So the ingredients are there. It's just the policy environment that we need and the mindset that we need to unleash that growth. That's where the opportunity lies.
So thank you very much, Samad. So starting with Hamayun. So Hamayun talked about ecosystem not required to be supportive in it's how you want to take things forward. You have picked up on the enablement and you have highlighted two areas. One is the taxation incentive or the inefficiency, how that supports or disincentivizes the current government, the current organization. And the second is that how we can increase access to capital for entities. And there is abundance, in your view, of talent. So, Saira, it'll be great to hear your perspective on the current state of play.
Thank you very much. When we look at the overall macro picture of Pakistan at this point, I would like to echo some of Samad's points because I think the stability that has been achieved and the progress that we see is indeed remarkable. It is fragile, however. And I would like to, on the macro picture, highlight 5 key challenges. The first one being the taxation burden and the lack of tax equity, the unfair distribution of taxes across sectors, which causes, of course, lack of competitiveness at many levels. Secondly, there is policy unpredictability, which leads to an unpredictable business environment, high risk. Thirdly, we talk about the high energy cost, which also leads to uncompetitive exports. And 2 other things which really merit mention is the slow contract enforcement and the burdens on the commercial courts and their pace of resolving disputes. That definitely impacts our business environment. And lastly, the accumulated losses and the high debt that the state-owned enterprises face, that is a real fiscal drag, but also crowds out the private sector. Looking at logistics particularly, logistics is a sector that gives us a great cause for optimism, and we see a bright future ahead for Pakistan as being positioned as a logistics hub for the region. However, when we look at the challenges, we will talk about the challenges first, and then we need to talk about the bright, the silver linings. The challenges, the foremost challenge in the logistics sector is the fragmented nature of the industry. We know that majority of the cargo freight movement in Pakistan, over 90%, 95% takes place by road transportation. And the bulk of these operators tend to be very small operators with 1 or 2 trucks in their fleet, maximum 5 to 10. This fragmented nature, both at the ground level and I will also mention at the policy level, leads to an inability to raise finance, technology adoption, etc. At the policy level, this fragmentation is reflected in the fact that there are about 5 or 6 different ministries that deal with transport and logistics issues. So whenever international partners or international investors come to Pakistan, they have to deal for road issues with one ministry, ports for another, railways for another, postal issues for another, air. And so this leads to lack of uniformity, lack of consistency across the board. And secondly, the second most important, Samad also mentioned the low margin, high volume businesses such as logistics have been facing immense cost pressures. There is a downward pressure on prices, there is an upward pressure on costs. The industry is becoming increasingly commoditized. There is not much scope for value-added services, and this leads to razor-thin margins, which causes problems for business owners such as ourselves when it comes to making investments that are much needed, investments in technology, investments in infrastructure, etc. And the fact that there is no level playing field, being a tax-compliant business actually becomes punitive, because the more you pay, the more you are asked to pay. And I think this is something that the government urgently needs to look at, expanding the tax net in an equitable way across sectors. And so when compliant businesses are squeezed and there is no scope for investment, obviously that has a clear implication for the future of this sector. And the promise that I mentioned earlier. Thirdly, I should mention the human resource aspect. There is a lack of trained professionals. We need across the board human capital training for logistics professionals, right down from the drivers, trainings, etc., all the way up. And so, when we talk about these challenges, we must look at the backdrop that, logistics, as I had mentioned, Pakistan can be the regional logistics hub. There are projections that just regional trade can be in the region of 1 to 2 billion just with Central Asian republics in the next few years. Currently, Pakistan's trade with its immediate neighbors is about $4 billion US compared to a total trade volume of about 32. This is minuscule and there's great scope for expansion here. But this will require a lot of heavy infrastructure investment to upgrade our multimodal avenues of transportation, whether it is road links, ports, the customs clearance processes, railway connectivity, upgrading the rail freight system. And so we will talk more about policy recommendations in the next segment.
Thank you very much, Cyrus. So the areas that you alluded to, so you picked up on contract enforcement, you picked up on lack of policy consistency, you picked up on lack of level playing field. So we are focusing on what we have been focusing throughout and highlighting that to the government. That's around competitiveness, that's around ease of doing business, and last but not the least, another area that you picked up, which is the infrastructure or the lack of infrastructure to support logistics emerging or benefiting as a regional hub. So continuing with this, so do you, Kabir, feel, you see, representing again the financial services, where there's a lot of inclusion and support happening through the regulatory framework. It is one of the highest or the most regulated sectors in Pakistan. So how do you see it playing its role, not just within the microfinance domain, which you may be representing, but also in the overall financial systems situation? Thank you.
Well, thank you, Asad. First of all, I would like to thank Nutshell Group for having me here. Good afternoon, ladies and gentlemen. I think it's afternoon now. So I've been a banker to the masses over the last 20 years, and I would want to bring perspective that's usually not shared in the urban centers. So I was part of the founding team of Tamir Bank back in 2005, which is now Easy Paisa Digital Bank, then part of the founding team of UBank, and now I have the privilege of buying Finca with the shareholder group and turning it around. And I'll talk a bit about that also. So talking about the regulatory framework, I think I'll take you people down to the memory lane. And many of you sitting here would remember that our central bank took a very brave move and allowed the first bank-led branchless banking model in 2008 in the world. And that we were inspired by M-Pesa at that time, which was in Kenya, but that was all telco-led, and there was effectively no banking infrastructure in Kenya. So our market was very different. So we were the first ones to get into that. Telenor acquired the very small mom-and-pop Tamir Bank, and we launched the service, which is a household name now, Easy Paisa, and then Jazz Cash followed, and the rest is history. Now, when you talk about regulation, and we will do the second segment where I have a few recommendations also, but we have to recognize when the central bank came up with the Microfinance Institutions Ordinance in 2001, it was a different world. And these were supposed to be small banks for social and financial inclusion, because I feel as a practitioner that there cannot be financial inclusion without social inclusion. So that element has to be there. So what were we fighting against at that time? 25 years down, although we have about 10 million to 12 million loans, not clients, I'll qualify that, because pretty much every microfinance borrower in Pakistan has 2 to 3 loans. So when you peel the onion, we are slightly over 3 million active clients out of a population of 250 million people. So this is just not even the tip of the iceberg, I would say, what we have done so far. The loan book stands at 500 billion rupees, which is nothing in such a large populace. And the size of the problem, I feel, I always say, is increasing faster than we are growing. We're all growing, but I don't think we're growing fast enough. So for that, obviously, it's a different world now. In 2005, it was different. In 2008, when we started with this digital branchless banking, as we used to call it then, now we call these digital retail banks or digitization of conventional banking. Yes, there is improvement in regulation. Yes, there are DRB licenses out there. The commercial banks obviously are venturing into the digital space as well. But I'll share my perspective with you. The problem that we're facing right now, and which is a reality, in terms of financial literacy or overall literacy in the country, you cannot expect today that a person, working in a field, a Hari or a Kisan, will go to the Apple store, download an app, and apply for credit. Eventually, maybe we'll get there, but whatever we're doing, we are currently banking the banked. We're improving the journeys of these banked clients right now in the urban centers, tier 1, tier 2 cities. But the real game changer would be when we go down to the masses and somehow make it so easy that people who are not that savvy will be able to use these services. And I'll give you an example of what we're doing. So we lend against gold primarily at Abhi Bank right now. There's a lot of gold in the country, and people come happily. We charge low. We used to do the same at Q Bank and Tamir Bank also. And that's a dead asset that is monetized. The bank's capital adequacy charge is 1/5 of what it would be for unsecured loans. In an economy in an industry like ours, where people are struck by locust, floods, and God knows whatnot, every second year, we have to be careful in terms of protection of the balance sheet. So central bank has come up with great regulations in terms of allowing us to take ample security for digitization. And the regulation is opening up even more in terms of loan limits. Because previously we could just give up to ₹500,000 worth of loan. You cannot do much in half. That will most likely be consumed. Now we can do up to 5 million, from $500,000. So that is happening, that is changing. But I feel that in terms of the understanding of certain people, or most of the people, that in terms of digital banking, we will be able to digitize the agri sector maybe in the next 10 years, yes, but I think a lot of work is required in terms of regulatory evolution, and there are models in other parts of the world who've done it successfully. One thing before I stop, I will say that for the gold loans that I was mentioning, so the people come in, they put their gold, we have vaults, we're sitting on 40 billion rupees worth of gold, and we're increasing it by 2 billion a month. So this is the kind of demand that Pakistan has right now. And these people are, by the way, very good in terms of repayments. Delinquencies are less than 1%. And the sentimental value with the family gold is huge, even if the prices go up or down. Now, we roll over, 60% of these loans are rolled over. So baby steps. What we're doing right now on our app, we're graduating these clients that they can roll over these loans from the comfort of their houses. So that's the starting point. And slowly, gradually, I think there has to be a pathway where we can actually graduate these clients in terms of digitization, because with 3.5 million clients, you compare yourself with India, Bangladesh, we are nowhere as far as microfinance credit is concerned. So in the next segment, the ideas that I and my colleagues in the network have, I'll share those. In terms of talent, we always say we have a lot of talent in Pakistan, yes, but I think, as a practitioner, there is direction that needs to be given, because when COVID struck, many of these banks went busted. So the bank that I was leading at that time did not go busted. I'll share the magic ingredient. We went down to the field, we started talking to our people, and one of my area managers, I always quote, he said, "Sir, tarbiyat taaleem se behtar." So the fact is, we talk about education, we talk about these degrees and these vocational training or whatever. In terms of character building, I feel us as the private sector as well, in terms of, we need to talk more about that, in terms of integrity and the value system. I think this is one area I would want to touch upon. This is what has helped us in our institution also.
So thank you, Kabir. So you brought up values, both from a consumer perspective, but also as an organization. But the points that you've highlighted in terms of regulatory evolution, social and financial inclusion, and the role the ecosystem is playing. So probably I'll borrow a phrase from the Chief Minister Singh, that there is a need for collective acceleration. Yes, Aisha, over to you, sir.
Thank you, and good afternoon, everyone. It's so great to see so many old faces, so many of the builders who've been doing so much to move Pakistan forward. And perhaps more excitingly, it's great to see so many new faces as well. So excellent to have you all here. And whatever we say during the course of this session and subsequent sessions, and you'll have the whole range of pessimism and deep cynicism to possible optimism. Truly, the solution starts with people in this room. So many of you are builders and enablers. And so as we go through it, just keep in mind that the solution is with all of you. And we largely know what it is. And so as we start thinking about course correction and redefining the future, I mean, it's such a massive space. And I was reminded, last week I was on a flight back to Karachi. And actually, no, I was on a flight from Karachi to Dubai. See, this is how much I travel. It's all over the place. So on one of these flights, I was sitting next to a very stern-faced Northern European lady. Now, if anyone knows people from Finland and Denmark, they're extremely straightforward and fairly sort of, to the point. And she seemed really upset. And like any Pakistani who has no idea of personal space and boundaries, I leaned over to her and I said, "Hello, you look a bit upset. Is everything okay? What's going on?" This is Pakistani. Okay, so she turned to me and she said, "You know what? I have just come back to Pakistan after 12 years, and I'm so depressed." And I said, wait. Why are you depressed? Please tell me. And she said, everything is the same. I came here 12 years ago. I saw certain things and they were broken, and I thought, okay, frontier markets, they'll make their way through. And I've come back 12 years later, and everything is the same. In fact, it's worse. And so I said, okay, so first I had to control my defensiveness and say, absolutely not. We have so much going on. Look at how great we are. I said, walk me through this. What are you talking about? She said, well, look at your overall income growth levels. Look, over the past 10 years, your GDP has not grown at the pace that your regional comparison countries have. And in addition to that, your population keeps growing. So when you talk about the fact that you're averaging, 3.5% growth over the past 10 years, and in many years it's 1% or even flat, but your population is above 2.5%, you're looking at a really, really difficult algorithm overall. And so finding yourself in 2025, the point that she kept talking about, and it's something that we should keep in mind as well, that at this point our poverty levels are worse than they were during COVID. And in the past 10 years, they're almost double what they were in the early 2000s as well. So we step back from that context and we can keep going into the indicators. I'm sure all of you have your own favorite indicators that tell you how things are exactly how this grumpy Nordic lady told me they were. But we step back and we ask this question about, well, what is it that has led to it? And again, if I have just one message, and my colleagues on the panel have made so many important points, but if you step up from all of it, the idea is about short-term and long-term. And often when you look at whether it is the policy landscape or what businesses are doing, and frankly, even what talent is focused on, they're optimizing on fairly short-term goals. And this is something, I'm an economist, so we always sort of believe in whatever the rules are, when you set those parameters, individuals, companies, societies will behave according to those parameters. So if we step back and say, in the regulatory space, policy making, wherever you look at, it's such a huge space. You talk about education, a lot of us are talking about the investment landscape. So what are these policies optimizing for? It's a question for us to think about. What are we optimizing for? Are we optimizing for growth? Are we optimizing for larger companies that are going to invest in talent? Or are we, as Samad mentioned, optimizing for companies that instead of growth are doing tax optimization and remaining small, because the burden of becoming formal and being fully transparent, and by the way, being able to draw on institutional capital is so significant that they find it a rational choice to remain small. So that's one piece. and you look at the companies themselves, again, the vast majority of our companies are informal, so mostly they're all family businesses. So is there an incentive to developing those formal systems in place? I think it's a question we have to ask ourselves. Is there an incentive to developing talent? I know on my team, it takes me at least 12 to 18 months to start developing someone you get in to the point that they're actually able to contribute in a meaningful way. So are we doing it? Are we doing the talent development? And please keep in mind that, as we have our population, there's always a bell curve. You'll always have, the bulk of your population is in the middle. They're of average, adequate intelligence. You have on the tails people who could fit in everywhere. And now, unlike any other time in history, previously the barriers to exit were very high. So if you were a doctor, if you went to the UK, you had to do your exams again, right? If you were a lawyer, you had to go to the bar again. Here, if you're in the tech space, you know how to code, you understand AI, there are no barriers. So we're seeing the most critical talent that should be the base of our growth, having even more opportunities to leave. And so unless we create strong incentives for them, long-term incentives, they will do what is rational. Businesses will do what is rational. And so it once again comes back to what are the rules of the game? Are we setting them with a mind to long-term optimization? Or are we just looking at short-term? Because this is something my father said to me, and I think many of our families say this as well. It takes a really long time to build trust and have a reputation for integrity, and it takes just 1 minute, 1 moment, one policy, one aberration to shake that completely. So as we start this conversation around course correction and really building sort of again on what we should be building, the strengths, investors coming in, that strength, let's also keep in mind that it's a long-term positioning to adopt. We have to put in place the policies and the systems that over the next 10 years, when this lady comes back again, she can clearly say, okay, this is great. I can actually see a real consistent difference. So that would be my hope. And let's keep going on. And as I said, all of it lies with the people in this room.
So that was very candid, Aisha. So for me, the takeaways is it's a choice to remain small for many businesses. And we need to ask a question to ourselves that whatever policy making is going on, is it actually achieving its purpose? And the very fact that we had this press conference, which the finance minister talked about, and the ambition to grow the economy to a $3 trillion economy, what is the ambition for the 3 years, and how they wish to accelerate. So accelerate beyond surviving, which is right now what we are doing. So over to yourself, Naz.
I hope that grumpy Nordic lady was on an outward bound flight, or she might have been sitting here, which may not have been a good idea.
She said she's not coming back for another
Okay,
10 years, so
right.
we're safe.
Okay, so let me start with the good news. The good news is, as I think our finance minister mentioned also, I think we've in the last year, in fact, I think we've come a long way with the macro stability that you've seen, and he was right. It's been actually acknowledged everywhere that we've done one of the fastest turnarounds, right? So which is very good. So macro stability you've seen. We've seen that this has allowed us to start accessing commercial markets as the government. You've also seen some conversations on trade and investment, that dialogue, whether it's been with the US, China, Saudi. So I think we're seeing some good things on that front. The question is, where do we go from here, and how do we get growth from here and productive growth from here? So, I mean, if I talk about, let's say, us at the World Bank Group, there's a country partnership framework that we do with the government, which typically is a 5-year sort of strategy. This time, for the first time, even within the World Bank Group, we've done a 10-year strategy with the government of Pakistan, because some of the areas that actually require work and require investment are actually long-term. So really taking a long-term view. And there are 6 key pillars that I will mention because they address what we think are critical issues for the country. The first is on reducing child stunting. We know that about 45% of our children are stunted under the age of 5. And in the poorest districts, the number is as high as 60%. I mean, that's really awful. The second pillar of that strategy is around reducing learning poverty. We know that 75%, more than 75% of the children are by the age of 10, they cannot comprehend an age-appropriate text. Right. So if that is, so these are two pillars that are related to human capital, actually, and investment in human capital. The third one relates to, increased resilience to climate change. Again, it's addressing an issue I don't need to mention. We see it on an annual basis. And whilst we can't change how quickly we're getting affected, we can certainly change our response to it. Right. The fourth is on cleaner energy and better air quality. We heard the minister also mention, we know where we stand on that as well. We have the resources, so that's another area we need to address. Fourth is on more public resources for inclusive development. And it's a nice line to say, but it actually means a lot. How do you get more public resources, right? We're talking about SOE reform, we're talking about privatizations, you're talking about, really putting your fiscal house in order, right? It means sorting out the federal and the provincial, etc. So that's the fifth. And the sixth pillar relates to more productive private investment. And I can't stress this enough because the private sector is the one that is going to lead the way. But obviously, this has to be done in tandem with government. I mean, today we're about 13% of GDP when it comes to private investment. This has to double. I was looking at the figures in the 90s. Our exports were 16% of GDP. Last year, they were 10% of GDP. Right? So that's how we've sort of come down. So it needs to be export-led productive growth, right? Because the minute you're export-led and you start operating in international markets and your firms get exposure, that's where innovation comes, that's where productivity gets unleashed, and that's where you start doing technological upgrades because you are competing on an international basis, you're not just domestic. So that is what we are looking at because we see those as the key challenges, and I've given you some metrics. So the problem is, how do you get there, right? That's the issue. And it's like Samad said, you've got the talent, you've got the resources, the energy, you've got all the other things. So the dots are all there. How do you connect the dots? I think that's the real challenge, and that's the important question to ask. The other not so good news is that for people that are operating businesses, is that whenever you are course correcting or you're kind of redefining where you're going, it's always painful. And we are starting to see some of that as you've seen electricity prices going up, subsidies being removed, you're seeing gas prices go up. So businesses are hurting, no doubt. So you're going to start seeing some of that as you keep talking about structural changes and structural reforms. This is part of that change. And I think that's one thing that we can put our heads collectively together to see that as long as we know where we are going and you have to bear this pain, how can we smoothen this transition for people, right? You're deregulating wheat, so you're seeing disruption in that market and you want to get to an open market, you want to open up the energy markets. How can we smoothen this disruption? So I'll stop here. Thanks.
So thank you, Naz. I think the takeaway for me, and it's very important that you picked up, that we have identified what's the current state of play, probably the challenges, unique to each of the sectors that the panel is representing. But for me, the question or connecting the dots is that how do you move from choosing to stay small and choosing to then be an export-led productive economy. So on this note, I'll hand over to Hamayun. And I think probably because we know that this is going to be the final round, it'll be good if you could close with your top 2 or 3 recommendations within this space as well. Thank you.
Yeah, thank you. Let me actually start by sharing Winston Churchill's saying. He once said, if you're going through hell, keep going. And let me actually also give an example of Indonesia. drawing a comparison of 2015 versus 2025, it was a population of 244 million. Okay, literacy rate 92%. The GDP back then was 755 billion US dollars. The foreign direct investment was $16 billion. The reserves were $60 billion. Financial inclusion in Indonesia 10 years ago was 36%. 2025, fast forward. The same country has 1.4 trillion GDP, 1.4 trillion. Literacy rate 97%. Foreign direct investment 55.3 billion 2025. And FX reserves 130 billion, with financial inclusion 75.6%. If you search population sentiment, by the way, population from 244 to 285 today, that's million. If you Google sentiment of nation in Indonesia, you will find they're having protests. They're saying there is elite capture. They're saying that there are government policies that are not helping poor because of inflation. This is the same story that we are also facing. But if a country, despite of all the odds, can demonstrate results in a matter of 10 years, and by the way, in Indonesia, there are 1.3 registered businesses. The tax to GDP ratio is 10%, whereas actually the businesses are 65.3 million, giving workforce of 97.7%, right? There are average 55 new businesses registered every year in Indonesia, every year. And let me draw a comparison of a developed country, Australia, where every year, 10 years ago, there were 200,000 businesses being registered. Today, there are 430,000 businesses, close to 3 million registered businesses in Australia, including all the SMEs. The point I'm trying to make is that as much as there are challenges in Pakistan, and let me draw an attention to Mashik's own example, our cost to income ratio in 2007 as a bank was 53%. Today, it is 29%. The revenue of the bank in 2017 was actually $1.6 billion. Today, the revenue is $3.6 billion. We have shut down 85% of our branches. Again, the point I'm trying to make, we have to rethink business strategy. We have to rethink costs. We have to rethink how to make use of innovation. And by the way, going back to Indonesian example, 65 million businesses. I remember when I joined banking industry in 2016 in Pakistan, the State Bank report said 200 digital businesses, the e-commerce businesses. Today, it is 10,000. If people are selling on WhatsApp without having any formal financial access, people are smart enough to do business. All we have to do is to provide that sustained and resilient setup in the country. People will find their ways out. Thank you.
So that's a wonderful base case, Indonesia, where the private sector led that, and they have the same challenges as Pakistan may be having. So in terms of the transformative rethink, what would be your recommendation in terms of how Pakistan can improve its trajectory towards growth, competition, and ultimately governing the economy?
So I met this guy in Davos earlier this year. Very smart guy who invests a lot with startups. He was advising the government. And I'll just quote what he said. He said, the greatest mistake people in position of responsibility make is that they think they have the solutions. They have none of them. The solutions will come from the people on the front lines. All we need to do is get out of the way. And I think that's very hard to understand, because when you have talented people, you don't need to motivate them. You've got to make sure you don't demotivate them. So just three things. Remove tax arbitrage as a means for making money. Number two, liberalize energy. Number three, contract enforcement. Let people transact, make transactions as simple as possible, credible transactions. And I'd just like to quote my father, chairman, who said something beautiful. I gave him the whole Google version of how to fix the economy. And he turns to me and he's like, I completely disagree with you. I said, okay, what would you do? He said, perjury laws. I was like, what? He said, all commerce works on trust. The foundation of trust is truth. The last place where the truth dies is the court. If it doesn't survive there, it survives nowhere. And I was floored by that statement. And you asked your lawyers, please go and ask your lawyers. There are people who are brought in as fake witnesses, judges are bought off, so people don't transact. When people don't transact, you don't have prosperity. So get out of the way, remove the taxations, arbitrage, free up the energy markets, make sure that people can transact transparently as fast as possible. All your AI issues, capability issues, investment issues will start getting resolved.
Thank you, Samit. So just reconnecting it with Dr. Musaddiq Malik and the point that he made that these are very simple solutions. And it's all about how you implement and make it easy. But I really like the term, get out of the way. And this is all probably that we need to do as leaders when it comes to our organizations, meeting the vision that continuously evolves. Thank you. Saira, your views, please.
Thank you. So Pakistan has domestic demand. It has a great geostrategic story. What is it that excites us in the logistics sector? I already mentioned a few points. So my tone is going to be more optimistic this time. We're going to be looking at the future and course correction. So there's an increase in e-commerce. There is an increase in online retail. That opens up a great deal of possibilities in terms of fintech-related entrepreneurship, et cetera, digitizing cash payments. That is something we're all working on. So, that, of course, leads to financial inclusion, et cetera. So that's a very exciting space. Secondly, we see a great uptick in demand for what I referred to earlier as value-added logistics, warehouses, temperature-controlled logistics, cold chain transportation, agri-logistics. So there's great scope for development here. And I already referred to the regional connectivity imperative of Pakistan as a very natural gateway between Central Asia, South Asia, the Middle East, Africa, Western China, et cetera. So really what we need to do is shift Pakistan towards a rules-based, export-focused, predictable business environment that leads to fiscal credibility, energy reform. It is underpinned by fiscal credibility, energy reform, and frictionless trade. That's the vision. And I have 4 main course correction ideas. The first one, of course, given our sector, the focus on infrastructure. So I already referred to the great need for infrastructure investment. If we take, for example, just one mode of transportation, which has been much neglected in Pakistan, which is rail connectivity, there is great need for investing in upgrading the entire railway infrastructure from tracks to locomotives, wagons, and really permit efficient freight transportation up and down the country. However, in order to do that, in order to open this space up for private capital and private sector investment, there needs to be certain exploration of perhaps public-private partnership models whereby the government opens up the space for investment and then allows the private sector companies and players to come in for operational efficiency, et cetera. So infrastructure has to be a central focus. Secondly, when we talk about regulatory reform, there's been a lot of talk of taxes, particularly when we look at the logistics sector and we see the uneven levies across provinces, the inconsistent application of certain sales taxes in certain provinces, et cetera. So again, there needs to be a harmonized, zero-rated tax approach for export-driven logistics across all modes of transportation. Thirdly, I will mention something that I referred to earlier, which is commercial courts and alternative dispute resolution mechanisms, again, to give more confidence to investors, both local and international. Samad also referred to the importance of truth and the integrity of contracts. And thirdly, female participation in the workforce is currently lagging behind. We all know the statistics. It's about 20 to 23% at best female participation in the workforce out of the female entrepreneurs. In Pakistan, we see only about 1 or 2% of all entrepreneurs are women. We see, with technology, the sort of work that fintech companies are doing and the growth of e-commerce, that is on the rise, which is great. But the government also needs to step in and offer, childcare tax credits, safe transportation policies, and equal workplace compliance. So the future is bright. Course correction needs to take place, and all of us, like some of the other panelists have said, the answers are within this group. So let's work together towards achieving this.
Yeah, thank you, Sarah, for sharing some wonderful thoughts on a bright future, and especially picking up and linking it to your previous point, which was the level playing field and also the lack of the defragmentation. So, and how do we link this up in terms of a more inclusive workforce with better women participation? Thank you. Yes, Kabir.
So thank you, Asid. So I would like to pick up from where Naz left it regarding, the linkage between the macro and the micro, right? So yes, we are under, you mentioned the World Bank program, the government policy, the finance minister spoke about it in the morning also. The thing that I want to point out here is that we need to ask ourselves, do we have sustainable institutions strong enough to deliver what we want to deliver, right? So as I mentioned, in the microfinance space, for instance, we are nowhere compared to Bangladesh or India. Why? Because there is no funding. So, and I'll talk very openly about it. In India, commercial banks have been mandated by the central bank regulation to put X%, of their deposits and towards microfinance institutions or institutions that are working towards the masses. Now, if you're an NBFC microfinance institution in Pakistan, they have stunted growth, if I may say. For 25, 30 years, the largest one is what? 25 billion rupees of credit, 30 billion rupees of credit in 30 years, with an average ticket size of what? 40,000 rupees? Compare your neighbors. What's happening here? Because there is no funding available. Now, we've got 9 trillion rupees lying outside of the formal sector in people's gallas and takiyas. The client that we are serving is not directly affected by all these great ratios we talk about formally of inflation and all, because we work with them, we know how it works. Even when we say that things are not looking good in Pakistan, you stand on GT Road, you see trucks and trucks of merchandise, and they're not there for hobby. So there is economic activity that's going on. You just need to go down there where the rubber meets the road and see what's actually happening. So when we talk about making policies for the excluded, for the unbanked, you have to talk about credit. And in terms of providing credit, when you look at the regulation, let me talk about the microfinance bank regulation. You've got a very onerous 15% capital adequacy ratio that you need to adhere to. The minimum capital requirement is, I think now has been increased to 2 billion, but has been $1 billion since the last 24 years. So you cannot, and mathematically, in $1 billion rupee of capital, you can build a book of 6.6 billion rupees unsecured without a call for growth capital. And capital is not readily available. So in terms of policy making, funds have to be given towards a sustainability agenda. When you talk about, it's close to my heart, the stunted growth of our children. 27 million children out of school, all that. But until credit is available and at a good price to the masses, I don't think we can bring about change. So my submission would be, while the regulation is increasing, the last point from my side, we've got the sustainability program like Benazir Income Support Fund program, the graduation, hand-holding by institutions, and then graduations from micro to micro enterprise to small, and divorcing small from medium. I think that is very, very important in terms of regulation. So in the interest of time, I'll stop here, but all of us need to focus on the how part and link the macro with the micro.
Thank you, Kabir. So just in the interest of time as well, so just Aisha yourself and Naz. So it'll be great if you could sum up your top 3 recommendations in terms of what would set this course reset for us to move beyond stability.
Thanks so much. And obviously, it'll be no surprise that all of us here on this panel will largely agree with each other on what the core recommendations are, and they should not be surprising to anyone in this room either. I think the context as we've described it is, unfortunately, we often find ourselves now in a bit of a vicious cycle where you have a set of policies and incentives that are leading to subscale corporate ventures that are not investing in talent, and that talent is not allowing these ventures to scale up, and the ventures then in turn can't lobby for better policy. And you keep spinning in that space. What we need is a combination of so many of the interventions we talked about so that we can shift to a space where you have stronger companies investing in talent, becoming bigger, being able to lobby again for better policies. So, and that cycle keeps moving, because at the end of the day, where we want Pakistan to be is not a space where I have to speak to my investment committee and say, please put an allocation for Pakistan, but it should be a standard, exciting space to actually put capital and resources in from within Pakistan and outside Pakistan. And it all centers on, as I said previously, a long-term view and really being focused on what are the incentives we're creating. The shift can happen at every level. I don't think it's just on the public sector to create the right rules of the game. The responsibility is on the companies as well to invest in talent, on us as well to have a longer-term view, and hopefully then start kicking off this virtuous cycle. Because as we're all saying, we're here because we recognize that we have everything. And so it's how do we kickstart it? The solution is with all of us.
So thank you, Aisha, recognizing that we're here because we have everything, but what it is required to scale up. Naz, your final comments before
Thanks.
Zivia
Thanks,
first off the stage.
I hear. So time's up. So I'll just add to Samad's points when he had 3 points under get out of the way, right? So under the get out of the way, I'll just add digitization of government, because that actually starts cleaning up areas, and you start getting efficiency, you start having fewer desks to stop at, etc. So digitization of government, and the other is, so the second point is PPPs. So privatizations, public-private partnerships. So basically getting government to move out of spaces that they should not be in. So these 2 points under that. And the third I would just say is institutions need to know their role, right? And what they're supposed to be doing. What is a regulator supposed to do? It's not just to look after the consumers, but it is also to look after the regulatees, because what you want at the end of the day is a sector that thrives, right? So different institutions and what their role is, so that they perform that. Because if they do their role correctly, people don't need to go beyond those institutions to ministries, etc. Let's stop here.
So thank you much to all panelists, and thank you, Naz, for closing that. So for me, the best takeaway, so we'll get to that, but just in terms of closing the conversation, I think it's a journey in terms of choosing not to grow, not to scale, from choosing to being an export-led, productive organization, and also knowing our role, that what we need to do as institutions or businesses, rather than relying on the public sector or the regulatory framework. Thank you.
Sir, the mic is here.
Okay. My name is Salman Javed. I'll just pose a question anyone can take. That what do they think that how much emphasis we should place while sitting under this roof and discussing course of correction towards the lack of human resource development, which is very important. Dr. Malia Lodi in 2 articles in Dawn has said that we stand 124th in UN human resource development.
Sure, sir. That's a good question.
So what do any one of you would like to say how much important it is?
Naz, if you could please.
Yeah, I'm happy to go on that. So it's absolutely critical. And that's why I mentioned the sort of country partnership framework that we have also with the governments. The first 2 pillars of that actually relate to human capital development. Because like we say, when the economy is in a crisis, economic crisis hits all the newspaper headlines. But this human capital is a silent crisis because it never makes it to the headlines. And it is really, really important that we focus on this because कल को अगर आप economy ठीक भी कर देंगे ना, अगर यही आपकी labor force होगी जो कि आएगी, तो फिर जो आप productivity की minister साहब भी बात कर रहे थे वो, you're not going to get that. So extremely important.
Thank you so much, sir. Thank you. Thank you so much, sir. If I could call this entire conversation a very effective toolkit, I will not be wrong about redefining direction. We spoke about the phygital world. We spoke about environmental policy changes that we need. We spoke about unequitable landscape and how to address that. We spoke about inclusivity and we spoke about people development. We also spoke about the keyword of long term, whether it's policy landscape or vision, health issues, export-led economy, and inflation and how it is damaging the interest of businesses. An excellent, effective set of actionable plans that, if put into motion, help redefining the course as we are talking about it today. We have to thank Asad for excellent moderation today. And with that, I would like to request Asfar to please come join us on stage. And we are blessed to have Khalid Awan Sahab, Chairman TCS, and someone with whom we have actually learned to appreciate the historical evolution of logistical landscape in Pakistan. His stories are fascinating, and his approach towards Pakistan is something that stands on a very patriotic pillars. With that, I would also request Senator Dr. Musaddiq Malik to please come join us on stage for the memento ceremony. Can I please hear some claps in the hall? We've got some great people up on stage here and an excellent conversation. The mementos, please, Samad Daud Saab, if I could request you to please step forward. Can I please continually hear claps? Saira Awan Malik, President TCS. Yes, please, keep the claps going. Naz Khan, Principal Country Officer, International Finance Corporation, Pakistan. Mohammad Hamayun Sajjad, Chief Executive Officer, Mashriq, Pakistan. Dr. Aisha K. Khan, Regional Managing Director, Acumen. Dr. Aisha K. Khan, Regional Managing Director, Acumen. Kabir Naqvi, FCCA, Entrepreneur in Residence, Abhi FinTech, UAE. And lastly, but not in the least, Asad Hamid, FCCA, for some excellent moderation and giving us these gems as takeaways today. If I could request everyone to please pose for the group photo. Sir, please, for the group photo.